All right, so here we are on in the Echotraders room, and it's Monday, 8:30 in the morning. Our first target here is 17,932. Of course, we had 938, but you're in this year trade from 956 up here. The market has retested that 956. And that's your first target. Now your larger time frame target, and we'll show you that. We're just going to scrunch left to right here a little bit, is 893 area. 890, 891, 893. We're looking for exhaustion somewhere around here, and maybe the market to step us sideways. Of course, you have larger targets to the downside as well as targets to the upside. Right now, we're trading short, and we'll see if the market will go. Our first target here is 932, and it's almost there. Market's just a couple of ticks away from that, and we'll come back and review this year after a little bit. Okay, here it is a few minutes later, and the market has reached our first target, 17,932. We'll hang on to a runner, but lock in the position so you don't give that money back. That's the whole idea. It's not how much you make, it's how much you keep. You heard this here before many, many times, especially in this room. So here we are back after the market open in our YM trade. We suggested that you trade to 17,932. The market came to the 932. You did get filled, and you moved your stop down to protect any remaining runners. This year market has reversed around your 9 o'clock area, and has come to our upper targets that we had mentioned earlier. So we'll see where the market goes, and we're just hanging on to a runner to the long side now. We're looking at a possible exhaustion up here at 18,030. Let me just move this here chart down the hill a little bit. 37, I guess. Okay, so up around here, we'll see if we can get to 0.23. That's your target here. And 0.37, we'll look for an exhaustion. That doesn't mean it'll stop at 37 or even 23, but it will have a chance. The market so far has come to 22. I'll put the crosshairs on right here, almost to the 23, not quite. Okay, back in the room here. On your YM trade, it's a chart on the right. The market has reached that target area that we were talking about, 18,023. It is a resistance area. Our MACD should curl and fall, and we'll be trading back down to our EMA, possibly the SMA down here at 967. We'll see if we get a follow through to that side. While we're on this here split chart, CL on the left, and we had talked about your entry up here at 5281 and 5267. The pincher top here, the MACD has indicated look for a short, and down here it said look for support. Drop your crosshairs straight down, find support. It's on gray. This year support our resistance ceiling in the room here, we were talking about it dropping, and it has dropped to there, down to here. Now we look for it to drop down into here. Our target right here on CL is 51.78, and beyond we want 51.43. We'll see if we can get 51.43. Our upper longs are all off the table now. We're trading below the EMA. I'll highlight the EMA here. All right, we're trading below that, so we have short targets on, okay? When the market changes, you have to change with it. It's not the market that has to change, it's the trader. Okay, we'll come back and check on both these instruments in a little while. So here we are back. We've given these two trades a little while to breathe. We're looking for that 51.78 and beyond. We should get it on your CL. That's the chart on the left. On the right, we have our YM. We did make it down to the 18.004 and the 18.001. There's the numbers for 18.001. We do look for that next target to be reached, the 100 at 17.992. Hasn't done it yet, but we look for it. Okay, and we're going to extend this EMA across the candle here. It's in behind, and we're going to take a moment and change that. But here comes our 51.78 on your CL on the left-hand side. We're zoomed in to the targets here on your CL trade. These here are your target numbers. We look for 51.43, but these here are on their way too. These are extended fib targets. Extended fib targets. If you watch, here we go, here we go, here we are. Here we are right there to it. I'll take the crosshairs off. Beautiful, beautiful, beautiful. My name is Dale Elliott. You are watching this on, or in, I should say, the Echotraders training room. All right, so we'll look for a target at 51.64. Our other target is 161, and that number, your price action, is at 51.43. We'll see if we can get down there. Resistance ceiling still dropping, and still pretty good divergence on the MACD. That's the yellow and black line at the top of your charts. Okay, we're back in the room here. We were anticipating a trade on our NG. We had showed your NG earlier in the room, but it doesn't show on this here recording. And we're looking for the NG to come to 2.508 and 2.500 and 2.503. So we'll see. We'll check back on that after a little bit. It did make the 2.508, as you can see. That's right there. Little double bottom on NG developing, but the candle is not finished. It has another 20 seconds to go. You cannot count double bottom there on that, and it's so close it may not hold anyways, and hopefully it doesn't. Okay, so that's your NG trade. Let's go back to your YM and your CL. We had mentioned your targets on those two markets. Let's see if I can get that over there. Okay, here we go. And we're almost to those targets, those confluence areas. The 161s you'll look for in exhaustion. This area is a support area. So the thing to do here is, if the market hasn't already taken out your stops, is you make sure you move your stop down and get your money locked in. All right, so that's your CL. Let's go to your YM, and what we have on the YM, what's happening here is we also had our target at 17.992, and the market came almost down to that target, and it stopped.
Order filled.
It made a little double bottom right here, and then it buggered off up to 38.5 6.2. We had wanted this market to stop at the 61.8, and that number, I know it's a little tiny bit hard to see. See if I can pull it over here on the chart. Whoops, wrong thing here. Just one sec. I pull this here back with a rookie. I'll see if I can pull this here over. I can't seem to highlight the darn thing. Okay. Here we go. Now just move those over just a little bit. So we had a target to the downside earlier, which part of this year got filled at 9:32 right down here, and it's about 8:30 in the morning. This year market came back up to our exhaustive targets at 18.023. And this year one you would extend at 9.76 just over here. It messed around at that price for a moment. At 18.03, that was a good place to take some money off or have it locked in. And this year with your targets down, we talked about 18.001, and the market did not hold at resistance at our 61, but we said if it did hold at 61, that would be our new resistance area that we would be looking for. We would want to trade that to 161%. That number is at 17,967 this year. Large red candle at your EMA. Here's your EMA right here, the blue line that I just highlighted. You look for that one to become your resistance. That number is at 18.001, and we had mentioned how important 18.004 is. Now we're trading below the 4 and below the 1. All right, 18.001. All right, so we're looking for our echo trade to the 141.4%, and that number is 17,977. If you can trade all that way without getting stopped. Okay, good luck. MACD, you need a little divergence and drop through 0. I want to come back to our other two instruments here that we're looking at, and I want to pull this here back over so you can see your NG trade that we're watching. And that NG trade has come to target. Okay, so job well done. You are in the market, in the pecking order, and you look for your extra 6 ticks. Extra 6 ticks would be 2.494. Didn't quite get it, eh? But you look for it, we may get it yet. Spinning top, MACD coming through the 0 line. The 0 line is the black line by the histogram. We have the 0 turned on, okay? The zeros are turned on, and it's the black line on your histograms. All right? Try, if you're watching more than one instrument, try to have your charts so they kind of line up like that. That's beautiful, right? That's not too bad. So all your MACDs, in this case, are all pointing down, but that's not the point that I want to show. We had talked about the look for the extra 6 ticks, so we should get that right now on your NG within the next minute, say. We'll see if we can get it. Come on, give us 6 ticks. So, all right. So we'll come back to this. We'll try to keep the recording short. So these are YM target on your right. Your CL targets are on your left, and your NG is natural gas, and that trades. That's the center instrument that we're looking at here. So exhaustion on NG was, we were to look for it somewhere around 2.503. While we are below that now, So this is why the market is walking us sideways at this point, because it's, you just look left on your chart and you'll see why, because there's some obstacles right around when we look left at that 503, right around 6 and 7 a.m. this morning. All right, so short targets on CL working out extremely well, and short targets on YM also working out really well. And I think we showed the targets. Yes, we did. So we're trying to get down to 17,969 area here. And this here purple line is your SMA 50. All right. So this is your EMA. We use the EMA because in the room we talk about the EMA, the price trading below that, and you aim for your SMA because it's the larger moving average. So that's the way we do it here. All right. We're looking for divergence on your MACD. All right. Good luck. We'll come back to this in a little bit. All right, here we are again. I want to zoom in on your YM chart so we'll see what we're looking at here. So we had talked about your 1977, and we just talked about in the room here at 17,977 and 17,976. It's on the left-hand side of your chart over here at 8 o'clock. All right, so we had just mentioned the confluence area here of it. Well, the market just came down to there. What did it do? It backed right off, didn't it? All right, we had talked about your 18,013, and we drew a line on there. What a great place to enter right there, trading the same fibs right back down the hill. Okay. We don't care which way you put them on. We prefer you put the fibs on with in the direction you're trading. But you can trade the set of fibs that you traded to the upside. You can trade them right back down. Normally, you're going to have trouble between your 61 and your 76 right here. That 76 holds as support. You may get a bump down into your 161 on this side at 967, and then the body finish back up here, and you'll trade back up to your 161 on this time frame, right? This is what we're still trading, but we want it to take a counter trend trade. So the counter trend holds and goes and goes and goes. We look for previous targets that were not reached today when we started. If support holds, we'll look for our long targets. And this is what we do each and every day. We'll zoom out here. So you want to see your 969, if we can make it down to there on your YM. We should be able to make it down there, but we'll see. Your CL, you have monies locked in. If you've already been taken out of that trade, that's fine. Job well done. Same thing here. We put a line on your chart. We'll just grab a line and we'll turn it blue. This was your money off locked in. You want to see that hold as your new resistance. If it won't hold, you're out of that short trade. Blue right here. Good enough. All right. All right, we want to wrap up our morning, so let's go through our YM real fast, our YM trade. Our YM trade, we were looking to come down to an exhaustion area. We had talked about your confluence at 17,976 and 17,977. That's confluence. We talked about you making it to your 161. We talked about the pullback to here and trading from the 38 to the 138. Well, the market did that, and it traded to the 161.8 at 969, and I think a tick or so below. All right, done. Exhaustion, and you've locked in your money. So positive trade on your YM. All right, let's go to your NG. NG, same scenario. The market had traded to a high, a double top. We put the targets on. Here's your simple retracement fib and your extension fibs. We traded to a money off area at 524, and then to your, from your 23 to your 38, right, at 522. Market at 522 backed off a little bit, came to your 518. That's nice confluence at 518 and beyond, and it backed off 511. Okay, so you lock in money. Market maybe took you out. We talked about your confluence at 2.508 and 2.508. Nice confluence right there. We talked about look for exhaustion somewhere around 2.503. Our target, simple retracement fibs, at 2.500. The market came to 53 and 200 and backed off. It gave you the extra. We were looking for an extra 6 ticks on 2.500 would bring it down to 2.494. We said, oh, you didn't get it, but later you did get it. Boom. Where do the bodies lie? Right here. This is the yellow line we put on your chart earlier. Right here. That's all your bodies are right there. That's at your 9.4. Okay? Make sure you don't give all that money back. So if you haven't taken yourself out of the market, that's a good idea, not to take yourself out of the market, then you've locked in as much of that as you can. You're locked in at least 500. All right? You're looking for the extra 6 ticks. Maybe you took it, maybe you didn't. Follow through. You want the market to follow through, you must follow through. Same thing on your CL. We had mentioned you're looking for exhaustion around 161.8 at 5151. The market came to 51.52, I think. 51.52. All right, we'll zoom in. Put the crosshairs on. It's 51.52, okay? Nice little what? Oh, a double bottom. Oh, a higher double bottom. We asked you to lock in money so you don't give it all back. Now where is the market? Did you give it all back? Here's your confluence areas. Did you give it all back? We had mentioned this magenta area down here is a support area right there. All right, I might be off a tick, but right there. Don't give it all back. It's a bad habit. Okay, we're back in the room. It's 1:20, almost 1:24, and I want to just touch up. You've been knocked out of your short positions on CL. We asked you to lock in money. The same thing happened on your NG. Let's go to NG really, really fast. And we asked you to lock it in, asked you to look for your extra 6 ticks. That all took place. Now the market's walking you sideways. Look at the time of day. The volume's drying up. Don't overtrade. I want to go back to the YM. This here YM is just fantastic here. We asked, or we mentioned earlier in the day that we would look for. I'm just scrunching. Oops, I'm not. I'm moving it all to the left. That we would look for confluence areas. We had mentioned the double top. This here is right here, and you'll be able to return the recording all the way back. This here dash line, when they broke the dash line, we ran up to target here. Okay, that's important to see. Let's go to full time or front time here, and I'll take this thing off. All right, so now I can scrunch up, and we'll come back to where that confluence area is, and it's at your 956. You can see 956 here. Well, that's where the market right here, that's your bodies. That's your bodies right here on the right-hand side. Okay, right there I have the crosshairs on that same 956 area. Okay, so the market has gone up to target, exhausted, and our MACD shows, hey, you want to start looking at the other direction. So we look for it, and we had our targets in place. At our 161, we said, hey, watch out. This will likely be exhaustion. The market exhausted at that, came back into resistance. Your resistance ceiling has dropped. Nice job. At that resistance ceiling, you have the follow through to the downside, right where we started earlier today. 17,949 was particular because this here number is your target here at that, and on the way up it's also a target here. All right, and that's where we just trade it right back down to 949. So Dave, on his chart, he has a small thin line here, and the market traded right down to it. That's exactly what we've been talking about, and there you go. So great job, well done.